tariffs are still there. To your point, it has not literally changed. But
they have said, I'm sorry, the big change that has solicited this 13% advance or 15% run up in markets is because both sides confirm that they're talking about talking.
Yep.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. Any references to performance of securities are thought to be materially accurate and actual performance may differ. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional.
And we are back. Thank you for joining us for another edition of the Daily Dots. And much to Chase's chagrin. Well, I hold on. I'm not doing my job. And I am joined as always by the brain trust himself, Mr. Chase Taylor. And much to his chagrin, we're going to finish a conversation. I tell my kids this all the time. You got to, whatever it is, we got to finish. You got to finish strong. We're having a conversation about Deshaun Watson and the Cleveland Browns. And we were talking about systems and how they thought he could fit into any system. And I think they were right at that time. I just think the guy's broken. And I think that guys like that, if you think about the way that he grew, it's kind of like Tiger Woods. I mean, Tiger did come back and win another major, after all that nastiness that he went through. But it's you see these guys. Watson has walked on waters probably since his freshman year of high school, right? And then all of the sudden, everywhere you go, you are the star, everybody loves you. And now all of a sudden, you are persona non grata, right? You're public enemy number one. And I just think that breaks a lot of guys, psyches.
Something broke him, that's for sure.
Yeah.
He went from being a top 5 quarterback to a bottom 5 quarterback.
Well, with no skill diminishment either. It's not like he was coming back from a really, you know what I mean? Like
right.
Everybody's had some injuries, but he didn't have a neck issue like Peyton Manning had. He didn't have something happen to him like Cam Newton had, right? Where all of a sudden Cam Newton couldn't throw a football, right? That's just a tough one.
Tell me about it.
Yeah, I'm not trying to ruin it. All right, so apparently all is well in the world. There is no trade war. All bets are off. Of course, I am being facetious, but not completely facetious. There was some softening of stances, if you will.
Yeah. I'm talking about talking.
Yeah. So run us through the indexes. We've got still 15 minutes in the trading day, so we're going to be a little off from the finishes.
Yeah.
And then we'll get into the trade talks. So yeah, run us through the indexes.
So S&P and NASDAQ both up about 1.5. Small caps up about 2.25. Mag 7's only up 1.12. And that's because Apple's down over 4% on the heels of their earnings yesterday. Oil's down about 1.5. You have gold up about 0.5%, silver down about 0.8. Bitcoin's pretty flat. Dollar down 0.2 after being reasonably strong the last couple of days. And then yields have took off in a big way on the jobs report. 2 years up 13 basis points, 10 years up 9. And then you have vol like front month VIX has come down to 22.6, which is kind of the lowest in a while.
Very, very odd response to that job report. If I had to grade that job report one way or the other, I would probably think it was a net negative, especially as it relates to the stock market in the near term, because there was nothing in that jobs report that's going to make the Fed cut. Now, I don't think there's anything in the jobs report that would stop them from cutting if that's what they were planning on doing.
13 bips on the 2-year tells you the market thinks it pushes out,
true.
At least pushes out a cut.
That's true. And I just don't know how that's good news.
It's fair. Yeah.
It's not good news.
I think people are probably viewing it as, well, if the labor market can hold up while we actually tame the trade war, maybe we can save what's going to happen to earnings late this year and into 26. I think that's probably the calculus. But more to the point, it's now official. We're in positive gamma for the first time in a while for options dealers, and vol controls back where they can buy. So you have massive new structural support you haven't had for like 2 months.
Now, and tough thing about that is any one comment coming out of the White House, potentially even Beijing, could ruin that because
up 9 days in a row. It's
9 days in a
you're getting
row,
a little fragile.
Yeah, and just gone straight up. You've gone up faster than we went down, didn't you?
It has been legit V-shaped.
Yeah.
from the 10% bottom day.
And keep in mind, with absolutely no changes.
Well, I mean, you can't say that. Give the trade war stuff has well, the tariffs are still there. To your point, it has not literally changed, but they
have said, I'm sorry, the big change that has solicited this 13% advance or 15% run up in markets is because both sides confirmed that they're talking about talking.
Yep, but that's a precursor to actually getting the deal. So
sure,
I think the market's happy to see that and run with it.
Like I said, we price in good things. We don't price in bad things.
Well, you're bouncing off of a pretty substantial drop, so that drop was pricing in some bad.
I mean, on a valuation basis, I think you're pricing in less good.
Well, yeah, but on a valuation basis, you could have got cut in half
and still be priced.
Wouldn't have been that big a deal.
Yeah, fair enough. Yeah, it certainly. Yeah, you could have gotten cut in half, and it wouldn't have been a generational buying opportunity.
But getting cut in half is still a big deal. So
yeah, it definitely is a big deal in markets. Yeah. But nothing materially has changed on the tariff front. That being said, markets are, and you gotta listen a little bit, because that's what's so tough about this scenario is that, it's complicated, right? Like there's so many cross currents and so many, crosswinds here. And the thing that I think is kind of tough about it is that if you get a trade deal, the thing that we have to keep in mind is that doesn't make anything better than it was 90 days ago.
Right.
Like
but if this hadn't happened, you'd probably be
right
30% higher or something. I mean,
yeah, I mean, I don't know.
The way the market's been going.
Yeah. But that's the other thing to remember is that whatever deal you get with China is not going to be as it's not going to be as positive for the economy immediately and for the market immediately as things were in the China relationship
right
at December 31st of last year. You know what I'm saying? Like no matter what, that situation is not going to be as good as it was prior.
Right.
That is not something to celebrate and extrapolate out multiples, in my opinion.
But to give the market some credit there, you're still down on the year, and it's May.
Yeah, yeah.
If you
and that's a big deal these days.
If you polled Wall Street on just yes or no, will we be negative on May 2nd? I would venture to guess that literally not one investment bank would have said yes.
Yeah, so it would have been a normal year, is what you're saying.
Right.
Yeah.
Well, actually, no. I mean, 23, 24, they were pretty negative.
That's true.
And we ripped. And then 25, they got super bulled up. And now here we are, we're down.
Well, I remember us having that conversation that one of our biggest concerns coming into this year was how bulled up everybody was.
Yeah. My kind of base case was up low single digits because everyone else thought we'd be up 10, 15%.
Yeah. Yeah. The other one I think is funny is, and we talked about this as well, but it is clear to me now, I don't know about the administration, but it is clear to me right now that a lot of prognosticators and a lot of market participants are taking a lot of solace in jobs reports and consumer spending. Okay. I think it's really important to point out well, you said it. I mean, you said it going into this jobs report. You were like, I expect this jobs report to be completely normal. Like I wouldn't expect a big surprise in one direction or the other. I'd expect it to look pretty good.
Yep.
Right. So it does. The reason why I wouldn't take a lot of solace in that, if you're bullish here, is because you wouldn't expect to start seeing job cuts probably until May this month. Right. That's if things continue the way they are. And it doesn't look like they're right. If businesses are sitting there going, hey, for whatever reason, this doesn't look like something that's going to be over in 30 days. I think you're going to have to start cutting jobs here right away.
100%. Yeah. No doubt. I mean, especially you think about trucking.
Yeah.
Stuff like that.
There's
just no two ways about it.
Housing. I mean, there's just a lot of these businesses aren't going to have a choice.
So speaking of housing, the jobs report was very solid. I would say a little better than I expected, including a lot of the inside baseball stuff you have to like peel away at like onion layers. But construction jobs were negative for the 2 out of the last 3 months. Those were negative this month.
Uh-oh.
So, not by a lot, but still, like that's the thing. That's what we've been watching for that for 2 years, and hey, we're here. Like they're negative.
Well, and
So,
barring an exogenous event, you and I were not expecting it to be a dramatic beginning. Two
No,
construction
right.
jobs rolling off. Just by very nature, and then looking at the backdrop, if we were going to see that big drop in construction jobs, which I think is inevitable, you would expect it to start as a trickle and then really speed up at some point.
Yeah, it becomes that everybody's doing it, moment.
Well, yeah, I think it's the moment you look around and you're like, look, there have been enough people laid off at other companies to where if we need to
Get somebody back, they're out there.
we can get them real quick.
Exactly.
And then I think you start cutting people loose at that
Right.
point. That being said, if you get some kind of trade resolution, right, out of this deal, I would expect. I mean, I guess you'd have to bet on continued rallies. But here's the thing that I think that again, U.S. concern. Go look at today. We get all that news. U.S. is still. It is now, instead of being the fourth worst performing market in the world this year, it's the third.
Yes.
It's actually gone down again, even though you've recovered.
That shocked me. So out of the 45 country ETFs I track, only 3 are worse than the S&P. And we talked about it. Like I thought we'd have, in the last week, would have worked our way back up towards the middle of the pack. Maybe it's been such a hot week. Then you pull it up and it's like, oh no. And to that point today, S&P's up 1.53. Here was 6 minutes to go. And the rest of the world's up 2.02.
Yep.
And that mean,
well, we see it in our portfolio.
Europe's beaten, China's beaten.
We see it in our portfolio today. I mean, we've got obviously some good performers, some timely buys on our side of it, but the best performing parts of our portfolio today are that international exposure,
Yeah.
And I don't see, everybody's getting excited about Mag 7. Go look at KWeb. Go look at the Chinese tech
It's
ETF.
up more than the Qs today.
And that's like
on the good China US news.
Yeah, and if I am never going to sit here on this radio show and advocate for people to go out and buy Chinese stocks for a whole host of reasons that we've talked about at great length on other shows. So I'm not going to go into that now. Having said that, if you're one of these retail YOLO, right, Tesla type, you love chasing the tech stuff. I think a lot of people are going to wake up to, guys, I don't think the hot money is triple Qs. I think it's KWeb. I think it's Chinese tech.
And I mean, we talked about too, like it's not even just the tech. You think about it, the valuation of BYD, who's making way more cars than Tesla.
Yeah. So, this was yet another example, and I'm glad you brought this up. This is another great example to share with listeners about this spread you have between U.S. companies and valuations overseas makes no sense. Tell the BYD Tesla company.
Yeah. So the easiest way to explain it is it's worth about a fifth of what Tesla's worth. And despite that, it's shipping a lot more cars than Tesla is.
It's like, isn't it like almost double?
I'm sure forward looking, it easily is. Yeah. I mean, they're making an insane amount of cars.
You should see it on a chart. That's the next thing we're going to work on. We're going to work on getting chart capability on the cast.
You don't want to unleash me on that.
No, I mean, that's all. I'm just going to allot 1 3-hour segment a week where all you're going to do is just come in and chart it. Because it's like Chase's brain. It's just a bunch of charts.
That is correct.
But my point was, if you see it on the chart though, you look at Tesla and you look at BYD and you're looking at sales deliveries, and Tesla's like flatline and BYD is just flying higher.
So for the first quarter total shipments, Tesla is at 336,000 and BYD is at 986,000. So it's more than double.
Oh,
so forget forward looking.
And trading at a fifth the price.
Yeah. So if you go to last year for 2024, just battery EVs, and BYD makes more than just battery EVs, and Tesla doesn't obviously. But just battery EVs, Tesla only beat them by 25,000 last year. So this year they're going to do more just battery EVs, and then way more because they do a bunch of hybrids. Their best selling car is actually a hybrid, not even a battery vehicle. So that tells you a lot. They can outcompete on batteries, and then their best selling car is in a battery. Like, that's crazy.
Yeah, that's wild. That's wild. But it's just, again, it's, you see it all over the place. That airline, we've talked about it, that airline company we own. Just, yeah, and it's a little, I don't know, not surprising to me, but it is kind of amazing to me watching this urgency, especially with US investors. Oh, it's like they just think there's only one market in the world. And God dang, guys, you got to open up your vision, because you're seeing it right now, right? If you've been in international names, they've held up way better in the market duress periods that we've had this year. And market starts going up, they're doubling US performance and sometimes more.
Yeah, we're sitting talking about, man, it'd be crazy if we went back to all-time highs. So you go look at all the European stuff. Oh, it's back at all-time highs, and then some. Like,
yep.
That stuff didn't have a problem getting back to the highs.
That's called breaking out. Yeah, it's going to be an interesting road. What else? One thing I want to talk about: Apple earnings yesterday. Right, we talked about that going into it. I got to be honest with you, I was expecting a little bit better. When you look at the fact that they still underperformed expectations in China, considering how bad expectations were.
Right.
That should be a huge warning bell. Now, I will say this. That is a pretty big deal for Tesla or for Apple to be trading down 4% on the tape today. Like, that's pretty bearish.
That is incredibly bearish.
Yeah.
I thought it would lift back to flat for no other reason than the market was up.
So did I. I kept looking at it, being shocked that it wasn't rallying. But if you're an Apple long here, I don't know what your thesis is. Well, the trade's great. Go look at the numbers prior to the trade. You're not paying attention.
I guess the only way you could frame it is that my passive flows are going to keep making me go higher.
Yep. That's the only, especially at this valuation.
And the buyback yield.
Right. Well, yeah, but then so they announced 100 again, another, and I will just say it right now. They yet more proof that management at Apple has completely taken their eyes off the ball and that they're trash. That might be a little bit, they are. I just think it's trash management. I think Steve Jobs is rolling over in his grave. They, on top of that earnings report, and you guys got to remember, this company was leasing out cargo jets to move iPhones around the world to front run this thing. You look at their sales disappointing. That includes people trying to front run the tariffs. They got a sales boost this quarter that they otherwise wouldn't have gotten without the tariffs, and they still missed. And another one underlying it that you pointed out that I thought was even bigger than that was services revenue missed. That's their growth story going forward.
Is, yeah.
They're losing market share every quarter in the iPhone, right? Now, it's not drastic, but I want to say a couple of years ago, I remember I feel like they were at 41% market share. Now they're at like 38 last time I checked, something like that.
That's a lot of phones though.
Oh, it's a lot of phones. What I'm saying though is just the growth story is gone. And you've got this thing trading at a market multiple that's 30% above the market, or a multiple that's 30% above market multiple. It doesn't make any sense. But again, on top of it, then they come back clearly to soften the blow and kind of pull their best Elon Musk and announce they've approved $100 billion stock buyback. Okay, that doesn't make me want to buy their stock. It makes me want to sell it even more.
Yeah, it's me, especially with that valuation. It just tells you've run out of ideas.
Well, yeah, and $100 billion. Think about what you can buy with $100 billion. That is,
I do every day.
Yeah, well, there you go. But you look at them. So let's say they execute that buyback right now. They soak up 3% of the outstanding stock. For what? They, as opposed to turn around, put it in treasuries and net $5 billion a year. That is the dumbest thing I've ever heard. Not ever. I think Boeing buying back their stock at 34 times earnings was even dumber. But this is pretty bad, right? Like, I just, that to me is the definition of just burning shareholder cash. That's inexcusable. Now, you get down to a teens valuation, you get that multiple down to 15 or 16.
Buy all you can get your hands on.
Oh, heck yeah.
I don't care if you borrow to buy at that point.
Well, because there's another thing too, right? When Apple's trading at a valuation like this, that dividend is infinitesimally small. I think it's like 0.38% or something like that, right? Where when if they're trading at 15 or 16, that dividend's more like 1%. right? So there's another, it's not just the valuation of the stock, but it's the stock you're extinguishing that you no longer have to pay dividend payments on. Where I'm sitting there going, look, man, you use that cash, sit there and collect the interest payments, use the interest payments to buy back stock incrementally if you want to, but hold that dry powder for when your stock gets hit.
Yeah, do more R&D to make more stuff. I don't know.
Yeah. I mean, yeah. Go. Yeah. Why don't you invest some of that? Well, you know what? The flip side is, again, I'd rather have them put it in treasuries. If I'm a long, what do I want? Do I want Cook out there executing some R&D program to launch a new product? I mean, if you look at their VR headset, that was a freaking disaster. I mean, that was just bad. The only thing they put out worth a damn over the last 10 years has been the AirPods.
Right. And then made them 1% better every iteration.
Yeah. Yeah. No, I mean, yeah, not huge.
But that's a problem too, because Gen Z kids do this, right? So
yeah.
Nobody needs an AirPod.
Speaking of which, I don't understand why Gen Z kids do that.
I have never, to me, that's like a boomer thing.
Yeah.
And then like Gen Z kids adopted it. So now boomers and Gen Z are walking around doing that. Like, I want to listen to their call.
Do you know why I think the Gen Z kids are doing it? I got a cultural theory here. No, I think it's reality TV. I think it's keeping up with the Kardashians.
Oh my gosh, never thought about that.
Yeah, because
it always happens on those.
Because they put it on speakerphone so they can hear both sides of the conversation. Yeah. That has to be it.
I hate that answer, but I think that's right.
I think it's right, dude.
Oh,
you see Kim Kardashian doing it, you got to do it.
Oh, that's the worst.
I mean, they're popular enough to where two of those kids are worth $1 billion.
Like, AirPods are so dramatically more functionally like.
Oh, better sounding, better audio. Yeah.
And you don't have to hold it. Like, that's just obviously way better. I've never understood it either.
Yeah, but you don't.
Plus, it signals, please don't talk to me, which I find to be an asset.
I will put AirPods in sometimes when I'm not listening to anything, just so people leave me alone. Yeah. That way I just kind of like, sir. And I'm like, I can't hear you.
I was walking to the gym today. A guy's walking his dog, has AirPods in, and a lady with another dog is crossing, or, like they're crossing each other's path. And the lady's like trying to tell the guy that her dog wants to meet his. And I was like, he has AirPods. He doesn't want to talk to you.
No.
His dog doesn't want to talk to you.
And he probably has his AirPods in specifically because he doesn't want to talk to you about your dog.
And her dog was like super aggressive, so it made it even better. Like, he definitely doesn't want his dog to meet your dog. It wants to eat his.
Yeah, no, he doesn't like you or your dog, lady. Yeah, but the Apple one. Speaking of which, too, something for those of you that it's I guess it's kind of a plug, but it's something that we should talk about. Recent client that we just got worked at one of the big tech firms and had a pile of stock, right? Done very well. But interesting situation. He's about ready to retire, right? He's got to start taking income off his investments. Well, only problem with that is he's got some really big capital gains. And in the state of Washington, they instituted that 7% tax on cap gains above 500,000, right? So what do? Well, we put together a scenario for him where we harvest some losses, did some other kind of creative stuff to offset his cap gains. We're able to sell about 2 million of his stock without registering any cap gains. And then we've kind of set up a divestment program over time, and we're using some callers effectively where we've got some downside protection because he's got a very concentrated position, obviously. But then writing covered calls on those positions to generate the income he needs. So we're not triggering the cap gains. So protecting against the loss from the concentrated position, generating 2 million worth of cash to start him off with, use for income, whatever else he wants to do without generating cap gains. And if you're out there, obviously we'd be happy to help you. But there are other firms that can do it too. These are things that you really got to start thinking about. People are sitting on really big concentrated positions. And it's like we were saying about Apple. And I understand what the response, but look, man, it's been one of my biggest winners. Yes, guys. And every investment you buy, you will need to sell at some point.
Yeah, it's not a winner if you don't sell it. I mean,
no. And it's the other thing is it's not an Exxon Mobil. Do you know what I'm saying? It's not even a Costco. Now, both those companies could go down with bad management and things like that. I'm just saying that when you look at a technology company, think of IBM, right? When you look at a technology company like Apple, they never stay on top, right? Because a new innovation comes out, right? Where it's like, if you've got, American Express, another Berkshire Hathaway favorite, right? They're pretty, you could say crypto or something like that, but there's not going to be somebody that launches a new credit card that immediately makes American Express, not needed.
And
right?
if they do, American Express will probably own it anyway.
Yeah, if you think that Apple is a forever hold and can't be beat, go read about a company called BlackBerry. Because I believe BlackBerry at the height had substantially more market share than iPhone did at the height.
Right. I
Right?
mean, for all we know, like the phone evolves to a thing like an implant in our head. Like,
Yeah.
and it's not Apple that does it. And next thing you know, people are like, remember phones? Those were crazy.
Yeah.
So it's just, you don't have to take a bunch of leaps to get there.
No. And especially with their record of innovation. And then one of the things you almost feel bad about saying, but the thing that you got to watch about companies like Apple is they can be victims of their own success, meaning you have one product that is so revolutionary. And you can make the argument that the iPhone may well be the most revolutionary, game-changing consumer device ever invented, right? And I don't think that'd be a hard argument to make. I mean, I think it's certainly right up there with the automobile in terms of impact for the United States, both culturally and economically, right? Yeah. But like I said, go look at BlackBerry. I mean, BlackBerry had what was at one point seen as an unbeatable moat.
Right.
They owned the entire industry.
I didn't think I would give up my BlackBerry for anything else.
I didn't think so either. The old QWERTY keyboards, right?
It was great.
But yeah, I just, and like I always, it's the road forward. Hey, the other thing is it's also the valuation. That's the real problem, right? It's the valuation.
Yeah, 20 times earnings, fine.
Yeah, 18, 20 times earnings. Okay, yeah, I could see a way forward there. Services revenue should continue to grow over time. I'd still like to see possibilities or R&D of some type of.
Right.
It just at this valuation, it's just a no-go. It's why I actually love it right here. And again, it's not a recommendation. I think it is a wonderful hedge right now to play this bounce. And that's the way we're using it. So I'm biased. Again, that's not a recommendation. I'm not saying anybody should go out and short it. But
yeah, betting against anything Mag 7 right now is probably,
it's not smart money. But
right.
As risk managers, I like for right now, and this sounds kind of crazy coming from me, but we've got a substantial long position in NVIDIA that we picked up, not right at the bottom, but pretty close. And that's offset by a short on Apple, and it's working beautifully.
Right. And then, same with short Tesla and then long Google and Amazon and Meta. So
yeah,
in a way you can just deconstruct Mag 7 and kind of bet on almost just like a mean reversion up in some and a mean reversion down in some.
Yep.
That doesn't have to happen by any stretch, but theoretically should happen.
Well, and that's the other crazy part, right? Like the other crazy part about that trade is with NVIDIA, with Google, with Meta. If you're long those names, Amazon, even if you're long those names, Amazon might not be. I didn't look at them, but I think they are on a forward-looking basis. But here's the crazy thing: all of those companies you're buying at a discount to Apple.
Oh yeah,
right.
Not even close, yeah.
And they're growing immensely faster. Right. So,
speaking of, Amazon they had some awesome forward-looking guidance for earnings. They were basically like, we think we're going to make somewhere between, it was like, 12 and 20 billion next quarter. I've never seen like a giant gap like that.
Jeez.
And that was for like the consumer side, which I mean is fair. Like, hey, if the trade war stays on, 12, and if it doesn't, 19 or whatever the numbers were. Like there's just a gulf in there. I think that's what hit them. Right after the earnings, people were like, it might go down to what? Like,
they're like, look, it's either going to be an awesome year or it's going to be devastation. Yeah. We'll just have to sit back and see the way it plays out.
Call DC if you want to know what's going on. I don't know.
Yeah, no. And I like, and that's the thing. The other part of this though, that I think people are missing is, guys, any resolution, I was saying this earlier, right? Any resolution you come to is not going to be as friendly as the setup we had a year ago.
It's going to be a lot friendlier than where we were a month ago.
That's true.
That's all the market cares about. I think.
That's especially this market. Yeah. And meanwhile, you just, watch, like, again, I feel like a perfect comp. You already said it. Europe, all of our international stuff doing better. But even on the tech side, US tech, we got to get it. It's bouncing. Go look at Chinese tech. It's up more than double what US tech is. Again, way cheaper multiples, way cheaper. It's just doesn't feel like there's a lot of juice.
And that's not just, out of that. I mean, China's beating the U.S. now for probably the last 20 something months. So it's not even like it just started this year. It's, China's beating the U.S. year to date, but also it beat it last year. So you're 18, 20 months, something like that, of outperformance.
Well, and you're coming out of a place too. I mean, a year ago,
That's with a lot of bad news thrown at it.
Yeah, wasn't the Chinese market a year ago trading at like where it was like in 2010?
I don't know the exact year, but it has to be something like that.
It was something like that.
It had been beaten up.
Yeah. So my point in saying that is you haven't missed the move, right? No, not at all.
Like we just talked about BYD. I mean, they're more than double the car shipments and valued at like 200 and something billion.
And I'll take it a step further. Again, I'm not advocating it. We've given plenty of warnings about owning Chinese tech, but I will say this. If you're buying U.S. tech companies because you think the trade war will get resolved, okay, that also anesthetizes simultaneously probably the biggest risk to Chinese stocks, which is a trade war prompting a Russia-like stoppage of allowing those securities to trade, right? Like, so my point is, if you're in there buying U.S. tech now because you think the trade war is off, I think the better play is Chinese tech.
Yeah, and speaking of this came out this week. Jensen Huang was in China, and he got asked a question about something along the lines of when do you think they're going to catch up on AI, or do you think they can? And he's like, they did. Like they have caught up.
Yeah.
People still think we're in the lead. We're not. Like China's right there with us.
Yeah.
I mean, Alibaba's come out with a new super cheap, super open model again this week. Like,
you know what I think a pretty good parallel for AI is right now? I think it's pretty good parallels to the space race with Russia. You know what I mean? Meaning, and it's kind of playing out that way, right? Like, meaning I expect to see, announcement from DeepSeek, right? Where they have a game-changing move forward. And then a little while after that, Google comes out and says, oh, right, we just jumped ahead of that. Kind of that back and forth thing.
Both countries have 3 or 4 major players.
Yep.
That are making significant improvements almost every month at this point.
Yep. And it's just kind of feeding on itself.
I mean, it's going to, and like Bill Gurley's been saying, like we keep talking about winning AI as if there's like a starting gun and then there's like a line you paint on the ground and whoever gets there first. Like this is an infinite game. It's not a finite game. It never ends. There's no winner.
No, AI to me, saying that somebody's going to win AI is like saying somebody's going to win chips. Do you know what I'm saying? Like meaning I can't tell you who's going to make the best, most powerful chip 20 years from now.
Right.
But I can tell you they're going to have really powerful chips 20 years from now. Right. It's just going to keep evolving and going, and, it'll probably have stages. Well, I mean, for instance, talking about AI, I think one of the things that people need to understand is that who's going to win AI, to his point, LLM is like the kindergarten of AI space, right? Like it's not really AI. Have you heard like Musk and Peter Thiel talk about this?
You mean the difference between like kind of more like sentient thinking AI?
Yeah, they're like, this is the first inning of AI. This is the first, because it's not really thinking.
It's the first time we've made something super useful that is technically AI for sure.
Yeah, it's not generating ideas, right? It's basically organizing data in a way that is way faster than any human ever could do it.
Yep.
That's effectively what it is. So to his point, there's going to be so many evolutions of this along the path that you might lose out. You might not be the first or second or third iteration, but you might win the 4th or 5th.
To me, it's all about who makes the best stuff for people on its backbone. That's what matters, not.
Okay, it's another great point. I think a good way to illustrate that is like, again, I'll use 2 of my favorite comps, but Apple and Google, right? Like Google is showing real cool, usable progress using AI. Apple has shown none so far. And I think that's one of the reasons that phone is underwhelmed.
Yeah, I mean, the fact that like Perplexity's app works better, way better than like Siri, like that just tells you everything you need to know. This small startup, is able to make something better than the Titan that has so many advantages built in.
Yeah,
like even Google. I mean, their stuff's better than like Google's voice recognition and stuff. Like, and I don't think a lot of people recognize what you can do with this already. Like you can just have a conversation with it, like verbally, ask it questions, it gives you answers. Like there's, I mean, I had a drive into work one day where I just had a conversation with AI about the Spanish Civil War. So in in a half-hour drive. I went from knowing very little.
We're using Perplexity.
Yeah, and just kept asking more and more detailed questions, and if every time it threw something at me I didn't really understand, I just asked a follow-up, and by the time I got here, I was like, all right, I have a decent grasp of this now.
Wow.
I don't think that's what I'm saying. I don't think people realize you can do that.
I didn't realize you could do that.
And so we'll be eating dinner, and my daughter, 4-year-old.
Now, is that only available on their paid subscription?
No, I don't know, but even if that's true, it's like $20 a month, so whatever.
Something really funny. I found out that my wife subscribed to Perplexity.
Nice.
Yeah. So she's using it. It's wild. So she asked it, hey, what's a good way to set up a system for the kids to do chores, complete with, changing the tag. Dude, it put together this complete setup. And then she asked it about meal planning for the week. It did all the meal planning, said what she needed to buy, when she needed to buy it, all this kind of it was like just a life hack.
It's crazy what it can do.
It's wild.
So my daughter asks questions all the time because she's 4. That's what kids do. And, back in the day, you ask a question adults don't know. They either make something up or they just tell you to shut up.
Yep.
But in this day and age, if I don't know the answer, like I can just be like, just ask the question and we learn together. So that happens all the time. A lot of times she'll be like, what does this word mean? I'm like, man, I can know, but I can't explain it well. So I'll just ask.
Yeah.
And then I'll be like, oh yeah, I didn't think of it that way.
Yeah. No, it's pretty
wild. It is a life hack.
It's a huge life hack. And that's just off the regular.
It's just the app, like the iPhone app. It just has a voice function. You can type in, or you can tap a little thing to open the voice, and then you just ask, and it's crazy fast. Here, let's do one. All right.
AI in real time here, folks.
Yep.
So what are we going to ask it?
Who's the all-time leading touchdown passer for the Cleveland Browns?
The all-time leading touchdown passer for the Cleveland Browns is Brian Sipe, with a total of 154 touchdown passes.
There you go. Do you have a Brian Sipe jersey?
Usually it's quicker than that. I do not have a Brian Sipe jersey. That's Cardiac Kids days in the 80s.
You need to fix that.
Number 17.
I know what somebody's getting for their birthday.
No, I don't. Not Brian Sipe. The fact that that's the best we have is it's not great.
I've never heard that name. I would have guessed Vinny Testaverde.
I would have guessed Bernie Kosar probably.
Oh, excuse me.
Or even Otto
Bernie
Graham
Kosar.
from like the 50s. But
yeah.
It won't take a good quarterback long to break that record. What if we ever get our hands on one?
Yeah, who's the best ever? I guess you'd have to say it was Bernie Kosar.
Oh, Otto Graham.
Well,
but that's not modern. Yeah.
Yeah, so it'd probably be Bernie Kosar.
Yeah.
Right. Yeah. That's a tough route. I don't know that. Well, here in Seattle, it's not much better. I mean, we had Warren Moon played here for a few years.
That's fair though, because it was only a few years. He was the most talented you guys ever had.
Yeah, he was the best.
He threw the best ball I've ever seen in my life.
He had a rocket going.
Yeah, he was a UW guy too, right?
Yeah. And that was before they thought black quarterbacks couldn't play quarterback in the NFL.
Right, he had to go play in the CFL.
Yeah, I think he won 3 Grey Cups or something like that.
Yeah,
just crushed it.
The fact that the NFL didn't think he was good enough is insane.
Oh,
he was so good.
I was thinking about that walking out of random. I was walking out of Costco the other day, and I can't remember what prompted it, but I just thought about what a bizarre concept racism is. You know what I mean?
Yeah.
Like it's such a bizarre concept because somebody's got more melanin in their skin that they're inferior. So it's a bizarre concept.
And that Warren Moon thing, you're talking the 1990s. I mean,
you're right. This wasn't 48 or something like that. I mean, yeah, the guy was just, you hear people talk about it and they were like, yeah, I was listening to an interview they did with him and they were talking to guys that played with him. And they were like, he was the only quarterback I've ever played with where you could hear his ball.
Yeah.
They're like,
I remember one of the announcers used to say he could throw the ball through a car wash without getting it wet.
Yeah.
It's still a very popular jersey in Houston. The Oilers Warren Moon, number 1.
Yeah, he was a stud. Speaking of shames, man, that Oiler team might be the most talented team to never win a championship.
They had some solid teams with Moon, like Webster Slaughter,
Haywood Jeffries, Lorenzo Neal. No, not Lorenzo Neal. Lorenzen, or the running back, Lorenzo White, wasn't that his name?
Yes, and they had Gary something too for a little bit. Was a really good back.
And they had some mean defenses too.
Buddy Ryan defenses.
Yeah.
When he was in his total heyday.
Yep.
Yeah.
He wasn't very good about getting along with.
He's not a good person, but yeah.
Yeah, not really.
All the Ryans are a little spicy. Man.
Yeah, that's a nice way to put it. Spicy.
But I'll never forget. I think it was Rex when he was talking trash to that player, and he said, "I've stepped over tougher guys to you to get to a fight."
Yeah. They're not short on bravado. Okay, pivoting back to markets though, and where are we at on the dollar? Speaking of which, in order to have that conversation, just secured our good buddy Brent for a discussion on that topic next week. I believe next week.
You're at 100 even, essentially.
Yeah. I'm really interested because I think that especially short, I mean, it certainly has implications the entire world over, but in the short run, if the dollar starts working higher again, I would think that really undermines the whole outperformance of international to U.S. at that point.
Yeah. And it kind of is a signal that the outflows, are stopping.
Have ceased.
Yeah.
Yeah.
And it also undermines, I mean, to me, the Trump administration's goals. I think they need it down.
Yeah.
I think if you want to help manufacturing, you want to help domestic businesses, exporters, not just of goods, but also of services. Like, one of the best things you can do is get the dollar down. And like a point Bob Elliott just made on another show recently was, most currencies, especially the thing about EM currencies and stuff, that their currency goes down, they have to defend it because, so much of their debt, so much of their economy is so outside facing that you can't really afford to have other people turn on you. But in the US, like, if the dollar goes down, it didn't really hurt us that much because, other people are the ones that fund us for the most part. So it's their problem. So you can have the dollar go down 20% and it's like,
Yeah. Well, and it
just helps.
Yeah. Well, yeah, we've long made that argument.
Yeah.
I mean, if the dollar goes down 20%, U.S. Commodities producers are going to be loving life. U.S. tech companies should be loving life too.
Yeah,
right?
it'd be wonderful for farmers, wonderful for the tech companies, obviously for manufacturers. And it's good for the rest of the world because they have a lot of dollar debt that's suddenly way easier to deal with. Like now
people would shout back though and go, well, don't you guys think? You guys have said that you think that the dollar bull market is over. I've said that, but what I meant by that is I think the highs are in. I expect bounces and things like that, but I do think I personally think we have started a secular quote unquote bearish trend on the dollar. Now, especially here at the start, I expect it to be kind of bumpy, especially considering what the world is dealing with. But this goes back to our international case again, because if we're sitting there having that conversation, it'd be perfectly reasonable for somebody to chime in and go, hey, wait a second, that sounds like it's beneficial for U.S. markets. And generally speaking, yes, I think it is. This gets back to the valuation conversation though, again, right? Which is, yeah, guys, but it's valuable for both. Meaning I think a dollar down 20%, if it's orderly, I do think it is a net benefit to the U.S. economy. And it's certainly a huge benefit to the rest of the world. It still doesn't make equities attractive, U.S. equities attractive on a comparable basis.
And it dollar going down enough would lead to some of those capital outflows, which obviously if you're Mag 7 especially, you get enough capital outflows and that's going to hurt. So in a way, the best thing you could have is dollar down a good bit and then markets kind of flat, I think.
Yeah.
Then you just kind of win in every direction, I think.
And emerging markets would just rip.
Yeah.
So I hate this because it's an overused phrase, but literally you get that kind of sustained downward move and you're looking at a legitimate generational opportunity in emerging markets. One that
even other developed markets that have been held down.
Yeah. And why do I say that? Because of the record underperformance that you've seen for so long.
Right.
right? Like, I mean, and that will engender a period of time where you will see emerging markets rally 80 to 100% in less than 12 months.
Yeah, this is where people that specialize in the countries in Europe that no one ever thinks about, and the countries in Southeast Asia that no one ever thinks about,
Alpha.
like they start. I mean,
Alpha.
just shooting fish in a barrel.
Yeah, alpha. Another one that I'm looking forward to is emerging market debt.
Yeah, especially local currency stuff. I think.
Oh man, when you get a dollar depreciating cycle in emerging market debt, you can go in there and buy that stuff when it's yielding 13, 14, right? And then just you're winning on both the improvements in their economy and the dollar dropping at the same time.
It's very reflexive. Yeah.
Oh, and then you're ripping the yield, which is going up on a dollar base. You know what I mean? On a relative basis all the time. That's spicy.
The flip side, which I'm sure Brent will bring up, will be that, and we talked about this earlier today, you and I, like if you get the trade deficit down and the budget deficit down, like kind of thing where all of a sudden the supply of dollars gets a lot lower for the rest of the world. So the demand for dollars better come down too.
Yep.
I think his argument would be like, there's so much dollar debt abroad that you need a bunch of dollar exports just for them to just service it. But we'll dive into that more whenever he's on, but it makes for a fun puzzle. That's for sure.
Yeah. And there's something else that we were talking about too, which was, Trump has a very big focus on the trade deficit. I really hope that there's somebody in that administration that's explaining to him that basically, and I'm not saying it's okay, and I'm certainly not saying the debt that we've racked up as a country is okay, and I'm certainly not saying all of the unfunded entitlements are okay. Okay, but when you are the world reserve currency, you basically have to run trade deficits.
Right. And giant capital surpluses.
You have to.
And that's what has killed me in this process is all the people that have been very, very pro the trade war, the like, let's stop goods imports people. Like, I feel like they all take for granted. Yeah, but like we have a giant capital surplus, we have a giant trade surplus in services. And that capital surplus, like, if people take their capital home, like, that is a huge deal.
You know what? Every time I hear somebody say something like you just said, like the people that are, I don't take, those are not people that I take seriously. And the reason why is if somebody's sitting there thinking, well, but if somebody's arguing it and people could say, well, that's what Trump said. I would disagree. I do not think that Trump really believes. I know that you and I disagree on this. I do not think Trump actually believes that tariffs are good. I think that is all part of him negotiating, making people think that that's what he thinks because he wants a better trade deal. That's what I believe. The reason I believe it is and whenever I hear people say, "Oh yeah, stop the good," that's how we're going to do. And you sit there and look at them and go, "Yeah, you're not a serious human being."
Like a pomp is a good example.
Yeah, people that are arguing that somehow these are going to be net benefits. Right. You're like, no, guys. In my opinion, if you're supporting Trump, you're making the wrong argument, right? The right argument would be that you believe, and I believe this to be the case to a certain extent. I think the only beneficial thing to me about tariffs is that I think that they could bring about a better trade deal. But to me, that's the only thing. There is no benefit to tariffs.
And to target very highly targeted industries that matter so much that who cares if it's inefficient? We have to make it.
The other thing that you could say too, they are not an answer for a significant long-term funding of the government.
No, that part kills me.
Yeah. Well, here's the other thing. If you think that the gap between the wealth and the poor needs to close, that will widen the gap between the wealth and the poor.
Yep.
Why? Because everybody is paying the same tax on every good. But that tax, by definition, is a much larger percentage of the regular guy's income than the rich guys.
Plus, as we've talked about, like Apple will get their carve out, the GM will get their carve out. The guy that runs the
mom and pop
HVAC shop next to you,
he's screwed.
Yeah, no one's getting the carve out for sound HVAC or whatever.
Yeah, that's not. It's just that's not going to happen. So my whole thing has been, I don't think that Trump actually believes that. I think that he's using him as the stick. And is conversely to the carrot. And anybody that's arguing that is a realistic way to fund a government. Here's the other thing. Everybody's like, oh, we won't have to do this. Guys, no, you will. The other reason why it's not going to fund a government is because whatever revenues the government is getting that are coming directly out of your pocket.
It's just a tax, yeah.
It's just it's a different form
just
of
a consumption tax.
Yeah.
Which is, like you say, regressive.
Well, and everybody gets so excited about taxes going down. You're like, it's not. It's just a different kind. We're just changing the kind.
Right.
Right. So yeah, you'll pay less income tax. Maybe your income tax rate will be 12%, but you're paying a 15 to 20% surcharge on everything you purchase. Yeah. Right. Now, if you want to make the argument about a consumption tax, it's completely different argument. But anyway, we'll see. I still, other than Beijing admitting to the fact that they're talking about talking, I mean, there's been no real movement here. So the question to me is, how long does this take?
Yeah, and it's a really important question because every day counts. Whenever it comes to whether or not we have a recession, or how deep we have one, how deep it will be. Like, every day matters. So so to me, the key is to get a ceasefire while you talk. We'll bring them down to 30 while we talk, kind of thing.
Yeah.
And if you don't do that, even 30 is not nothing, to be clear, but at least it's not an embargo. Because if it's like, well, we'll just talk for 3 months while we keep 100% tariffs, like, well, you're gonna have a recession.
Yeah. Well, yeah. I mean, because you're talking about how to best put the flames out while the house is on fire.
And then, by the time you're about to do a trade deal, everyone's going to be against everything you're doing because you're in a recession anyways. Like, you kind of lose a lot of power that way. Mm-hmm. And on that note, like, you probably still have 2.5 months to go before you can get this bill through. So even there, like, you should probably do the ceasefire so that you keep all your GOP support in line. Because if you dive into a recession and you try to get these moderates to back a lot of your spending stuff, like, if your approval goes from over 50 to under 40, that's when like some senators can be like, yeah, I'm not gonna sign this. So that I think the sequencing of things gets important for them.
Yeah. Well, it does. Yeah, it's really important to them, and it's why I think you could make a really strong argument. Catch 22. Because part of me was sitting there thinking, if you're going to take something on like China, you're best to do it in the second second 2 years of your term. That being said, in the first two, you got no guarantees, right? So in the first 2 years, that you've got the numbers theoretically to get a vote through.
Yeah, I mean, midterm primaries are about to fire up, like it. Yeah. And that may matter as much as the midterm itself, the primaries part. So this legislation is going to be super interesting because everyone's just treating it like it's going to be fine, and the divides within the GOP on at least 3 or 4 different things.
It's not just the GOP, man. It's not just the GOP. Like, the other thing that you got to be worried about is, I guarantee you there are some obstructionists on the left side of the aisle that will want to deep six any bill proposed because they want, like,
But if they go reconciliation, they can get around almost all that.
Yeah, I know, but there are, look, this sounds like an anti-American comment. I think if anybody is paying attention, they acknowledge that this case is the truth. If you do not think that there are people on the left side of the aisle that will not vote for any bill, regardless of what's in it.
Oh, yeah, they're not going to vote for this.
No,
it has to be all Republicans, which means you have to keep them in line, and that's going to be really difficult.
There's a real possibility that no matter what Daley cuts, he can't get it through Congress anyway.
That is, I think, is a genuine concern that I don't think people are thinking about.
No, because, like I said, because whatever you do,
like they can't even agree on the SALT thing.
Yeah, you're not going to get all the Republican votes.
You can lose 3 in the House. That's it, I think.
Oh, that's it. That's a tall task.
Yeah,
it's a tall task because you're not going to get help from the left.
So you're going to either do no cuts, and the Freedom Caucus likely doesn't go for it unless they cave, or
how do you
cut Medicaid a bunch, and then all your people in the middle are like, I'm not cutting Medicaid.
I hate taxes. Yeah, I hate them as much as the next guy. I don't understand. Like, I like a lot of what the Freedom Caucus stands for. Okay. The thing I cannot understand is when you are running $2 trillion deficits, how you're advocating for tax cuts.
Well, you're saying spending cuts. They're the other side. Yeah. They're the ones that actually want some real spending cuts.
Yeah.
The problem is the thing they're kind of targeting is not a thing many people can vote for and survive with the Medicaid cuts, which it seems like is the only thing they've found to really do any cutting on. Well, so it's gonna be interesting.
Well, and that's another third rail. I mean,
so either if
No, anybody that cuts Medicare substantially, you're going to lose the next election. Period.
right. So especially these, kind of purple districts where these Republicans are, they're like, well, I can't vote for that.
Well, and that's the tough part about where we're at politically and culturally here is you really are at that point of, eventually the citizenry will vote themselves largesse the state treasury, and that's where we're at. You know what I mean? Like that's where you're at.
Yeah, and if the Freedom Caucus does roll over, and you just basically get no cuts, then you're just talking trillions of unfunded tax cuts on top of an already big deficit.
No, and look, and I don't mean to poke fun at people. And if you're one of those people out there, I'm not trying to dog on you, but I can't tell you how many conservatives I've heard say things like, yeah, we got to stick it to them, and yeah, we got to do this, we got to do that. Oh, but well, you can't cut my benefit.
Right.
You know what I'm saying?
Right.
It's not NIMBY.
Wait,
not
Medicaid, hold on, I need that.
Well, yeah, hold on a second. You can't do that.
Yeah.
And it's that whole not in my backyard thing, right? It sounds like a great deal until you're the one who's getting this your stuff cut.
I like coal plants. Oh, you want one next door? I do not.
No, yeah, right. Yeah, that's going to be, and that to me is one of the toughest parts about tackling this whole budget situation here in the U.S. is it is implausible to do it without addressing it's impossible. It's ridiculous to do it if you don't address entitlements, and yet at the same time, the only way entitlements can get addressed is in a bipartisan fashion,
right? And
that's impossible. Not in the current environment.
To me, it's just one of those deals. It has to be a crisis.
Yep.
In order for people to sit down as grown-ups and be like, all right, we literally, it's not a funny thing anymore. We have to fix it.
The scary thing is what kind of crisis would be big enough to engender that? That's the scary part.
To me, it's where it's obviously what's creating inflation, and inflation is so bad that people don't care if they lose benefits to get inflation to go away.
Yeah. That's
in that environment, you can sit down and be like, all right, here's how we do it.
Yeah. It's the only way forward. Next week, we're looking at kind of a quieter week, aren't we?
Thankfully, yes. After a wild data week, this week, pretty chill week next week. We do have the Fed Wednesday. They're not going to cut, but obviously how they sound regarding June starts getting important. June's kind of been waffling between cut, no cut lately. A couple different members have kind of made it clear like it's on the board, but they made it sound like it's on the board if jobs erodes. So after coming off this strong jobs report, unless the next jobs report's awful, I don't think June's really on the table either. But we'll see.
If you don't get any resolution on the trade front, I kind of feel like, and it could be very short lived, but I feel like you're going toward a kind of like a Wile E. Coyote moment, kind of where I think that there's real life possibilities. You could see drastic job cuts in a very short period of time.
Yeah, if they don't change the China numbers, right? I think. And by August, you've lost 100,000 from here.
Well, and think about all of the businesses out there that are dependent on these goods from China that literally are not ordering them right now because they can't. Right. It's too expensive. Right. How long can they be in that posture without laying people off? Not very long.
Right. And I mean, even if you just think about this in retail, a lot of times retail's inventory is kind of like a month or two. So if you think about it, that's sort of your runway. Where literally like you're running out of stuff. And then if you run out of stuff, you don't need people to put the stuff on the shelf, et cetera. So, but like you say, if you're a manufacturer and some of your inputs come from China and they dry up, then you don't have things to manufacture and you don't need people.
Yep.
And obviously you look at the port situation. I mean, the employment at ports and truck drivers and rail and all that stuff, that's not one where you're like, well, wait it out for 4 months. Like, no, it's like, you can go home now.
Well, and to be clear, that's already happening. I mean, you've got people at ports that have nothing to do right now.
Yeah.
Right. And so the reason they're not getting fired is they're hoping for a quick resolution. I guarantee you that most of those operators have a date on the calendar, right? Where they're like, okay, if we don't have something by this date, we're laying off A, B, C, D. They've already got their list ready.
Yep.
I'm sure they do.
You have to.
Yeah. And so that's like one of the points you were saying is we're looking so myopically at a resolution. And I don't think anybody is clearly markets aren't sitting there going, guys, if that resolution takes an extra 30 or 60 days to come to, or getting it through Congress takes an extra 30 or 60 days, that is real damage that's being done.
Yeah. To me, that's why the key is to not negotiate at these levels. It's to cease fire it back to where it came from and then talk.
And for the first time in the last 15 years, you do not have the runway to bust out fiscal here in the US you don't have the monetary tools to deal with that. You certainly don't have the fiscal tools to deal with it.
Right.
You can deal with it, but you're going to also get unwanted consequences on the back end.
The bond market isn't going to like it. And you're going to,
Oof.
I mean, Trump has literally talked about balancing the budget next year. So if you go from that to having a $2.5 trillion deficit, $3 trillion deficit because you're doing fiscal, like, it's not a good look. I mean, there's some people that actually do care about that would look at that and be like, I thought we were cutting spending.
Yeah.
What happened?
Yeah. That's another mistake I think the administration has made is,
I mean, and talking about the Doge stimulus checks and stuff, like that's not a thing to wave out in front of voters to me. If you're not going to do it, that's like putting a T-bone in front of a pit bull and then be like, just kidding, you don't get it.
well, I mean, I don't think anybody they never stood up there and said you're going to be getting one. They were talking about as possible things.
Right.
They
I'm
could
just
do
saying
with
I
the
would have done
savings.
that. Yeah.
Well, I don't. So to your point, I don't think it's very smart politically.
Yeah, that's what I'm saying.
Yeah, you just never want to pull away the chair from constituents.
Yeah, don't highlight free goodies if you're not going to give them out.
Especially that, right? Like especially that, and that's why from the very beginning I've just been like, look, I just wish the communication was different. It's hard to look at this situation and not go, guys, I really think you're making this harder on yourselves than it needs to be. You know what I mean? And
that's for sure.
And maybe that's putting it too lightly. But I just mean, like, I love what you're trying to accomplish. I think if you'd have gone about it this way, that way, I think there'd have been less consternation.
For sure.
But you know what? You and I are making decisions. It's probably a good thing. So what do you got? Anything in closing?
No, I don't think so.
Or anything we're watching really closely going into next week? I think what gold does is interesting. I think gold has been sort of an interesting kind of its own form of volatility through this process, right? Like it really responds to this stuff. It seems to be the pressure outlet for this whole situation. So I'll be watching gold. I think you got to continue to watch rates.
Big time, because rates pop back up again. So now, like on the chart, it's like, okay, there's going to be a problem again soon. But the flip side for me is agriculture commodities, which we talked about last week. To me, one of the beauties of that trade was if China and U.S. can have détente, like you would think what comes with that is, China goes back and buys a little cotton and soybeans and stuff, to like as a gesture or whatever,
or maybe a lot,
or part of the deal will absolutely be that. And that's another thing. Getting the dollar down would be a big help for. So I'm going to watch those as like a proxy for the trade war stuff. If it's actually going well, I expect things like soybeans and cotton to be doing great.
Yep. But for what it's worth, I think we're both on the same page. In my opinion, if things do not go well, you got to be careful across the board, right?
Yeah.
But if you're playing the things go well or a resolution to all of this, I would encourage you to look outside of U.S. markets too, right?
Exactly.
Like just if you're looking to make the most on trade resolution, in my opinion, it's going to come from outside these borders.
Yeah, all roads lead to not U.S.
Yep.
For now, to me.
Yep.
Yeah, and unless we totally go back to normal, where all the capital comes here, and all that.
Well, and I'll tell you too, the other thing I've learned, it's fundamentally that's certainly the case when you look at valuations and relative performance and all that other kind of stuff, right? But it's also the case that view corresponds with flows, right? People leaving and the economic case. Like, I mean, meaning when the price action is doing exactly what the fundamentals suggest it should, that's where you have to pay attention to that. And that's what's happening.
Yeah, I think capital allocators around the world were able to fall asleep at the switch because of how powerful this trend was.
Yep.
And I think this year, even if it largely comes back, let's say America finishes 12th best instead of 40th best, right? That's still 12th best. And what the first 6 months of the year would have still have woken the people up to be like, we have over allocated and we should change that.
Yep.
So it doesn't have to be drastic. It could be like, instead of 70% of our capital being in America, how about 60? Even that's a huge deal.
Yeah. Well, we just again, because it may not sound like a big deal, But
that's hundreds of billions of dollars. Yeah.
well, yeah, and I honestly believe the average investor does not understand how much international, in terms of a percentage of the pie.
Yeah, I mean, you're talking $30 trillion of the rest of the world's money.
Yes,
here.
yes, and keep in mind, you have never had more of the world's money in one place than we had in the U.S. here. Okay, so because that number is so large, you don't need a big percentage reduction of that to really, it sort of reminds me of oil, and it's not as sensitive, right? But explaining to people that, when you watched going into 08, 09, I've used this example so many times. Going into 08, 09, you were looking at $100 oil, 150. I think you topped out.
You got up to 150. Yep.
Yeah. Okay. You get down to the bottom of the GFC. I think you got down to 35.40, right? That drop occurred because global oil demand peeled back 3%, right? Now, I don't think it's quite as drastic here,
but it's not linear.
No, right. It is so much different. And I think it will have a bigger impact in driving other markets up than it does driving the US down.
Right.
Right. Because there's no gunpowder in those other markets.
Which is what you see year to date. That's why Poland's up 40%.
Boom.
Right.
Yeah. Because all of a sudden, when you start pumping cash into a market that went no bid, things move real quick. Right.
Exactly.
Like, I mean, it's just, yeah. Anyway. But yeah, that does it for me. If you got anything else.
Nope. Good.
All righty, guys. Well, we'll be back at it again next week. As a reminder, you can find us on YouTube now, complete with video. I don't know why our video is not. There it goes. It's switching back. We're still working out some, like I said, we still have some ghosts in the machine. We're getting this dialed in. But anyway, you can find us on Instagram, find us on YouTube, the videos, Know Your Risk Podcast. Go to knowyourriskradio.com. Subscribe, gets us more of these guests. We've got some good ones lined up. We got Kevin, or excuse me, we got Brent next week or the beginning of the week following. We're working out the exact detail. Then we got Kevin Muir coming on after that. Still working on Rick Rule. He said he would do it, but we're still, is
Druck the week after that, or?
Yeah. Yep. We're going to get Druck in. Well, no, I was just going to say Rick can be hard to, he's going to be hard to nail down, this international man of mystery.
Yeah.
But truly like the godfather of natural resource investing. So, and I know he did, my grandfather and my uncle participated in several investments with him and did really well. So it'll be fun to pick his brain. But anyway, yeah, you guys want to catch that. And again, we'll have video feed for all those too. So anyway, have a great weekend. We'll see you next week. You're listening to Know Your Risk Podcast. Download and subscribe at knowyourriskradio.com.
Investment advice cannot be given without a client service agreement. Zach Abraham is an investment advisor representative of Trek Financial, an SEC registered investment advisor. Bulwark Capital Management is a marketing name only and does not carry a separate registration.